The market moves lower. Did the bears return or did the bulls just take a break?
This is Invest with Jacob.
Okay, guys, so in yesterday's video, I gave you several key levels, starting with 56.90 and said if the bulls were above that, they would be in control. But below that, we would look at 56.68. Then below that would be 56.30. And that's exactly what we saw as the market broke key levels and followed through to their next targets. We also talked about weakness on the NQ and saw that as well. And now the question is, are the bears here to stay or did the bulls just take a break? I'll get into that in just 1 second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the markets moving down, let's jump into the chart and take a look. Okay, guys, so here we are on the 1 hour futures chart for the S&P 500. And we saw the market move down overnight and then continue with some follow through during the day, coming down into that 46 or 56.30 region, which I told you was a pretty heavy support area here, and closing the market basically right there. So now we'll see if the bears can follow through and break that support or if the bulls are going to try to rally. There are a few different things to look at and consider here. We are looking for a topping region. We have been for a while, and we do have the first signs of a potential move down. However, we can't get out ahead of ourselves as we have not broken major support. And until we do, the market does remain in a bullish state and the bulls are in control. So those are all things to keep in mind when we talk about the potential paths for the market and why understanding the key levels is what's really important about these videos in Elliott Wave. So we've seen this show before. They dropped it here in a one-day sell-off, bought it right back. They dropped it again on a one-day sell-off and bought it right back. Now they're dropping it a third time. And we'll see what happens if they're able to buy it back and the bulls want to move higher or not. Overall, we would be potentially looking for a bounce off of this area. It is key support if the bulls are going to remain in control. This is one of the first areas they'll want to defend. You should see a lot of buyers here. So if the bulls are strong and continue to be strong, we would look for them to try to bounce this up and take it back to the highs. And in that case, we'd be looking toward that 57.43 area as our next target higher. And from there, we'll see what kind of structure we get to give us our next target. We have to build those structures and get those key levels off of the wave counts. And when you saw today how those key levels worked out pretty well overall. So assuming the bulls want to remain in control of this market, that would be the bullish first option, is to hold 56.30 and give us a higher low and then a breakout back to the highs. For the bears, they can do it a couple different ways. I would prefer they break 56.30 more directly. It would lead to stronger selling and be a stronger show from the sellers. It's certainly not unreasonable to get a bounce off of this level. This does count pretty well as 5 down. So you could see a wave 2 bounce before we see this kind of move like we did on the NQ. If we look at that chart here in just a minute, you'll see what I mean. But you get the initial move down, the bounce, and then the 1, 2, and the breakdown. And so that's what we'd look for next. But from a bearish standpoint, if you are a bear in this market, you would like to see actually a continuation here and an extension in this straight down selling. A little more to show the strength of the sellers as opposed to just a pullback that's going to get bought. So 56.30 remains our first key level to the downside. If they get through that, we would look at 56.10 and 55.85 next, with ultimately down here at the 55.20 area being a major level for the bulls to hold to the downside. So through 56.30, we look at 56.10. Through that, we look at 55.85, then 55.20. If they do try to give us a short bounce and then lower, the bears would want to hold it under the 56.87 level. They can take it to 5,700 as the 764. More often than not, we'd like to see the 618 hold here. If they push above 56.87, we would have our eyes on 5,700, knowing that above that, it's very likely we're headed towards that 57.42 level next and new all-time highs again with the bulls bouncing off of 56.30. So bears on any kind of bounce want to hold 56.87 and push down from there, continuing in this downward movement. Over on the NASDAQ. Okay, so on the NASDAQ, as I just talked about on the ES, we did see that move down that was straight down selling, and then we saw a bounce, and then we saw a 1-2 set up to the downside, and then the breakdown. So that's what I was talking about. If they do give a bounce there, that's not the end of the world for the bears. I prefer, again, if you're a bear, I would prefer them to sell a little stronger there, but not the end of the world to see a bounce here, especially if it's a weak corrective bounce that holds the level. But for the NASDAQ, they followed through to the downside. I told you if they broke 53.60, we'd be looking at that 20,000 to 19,900 region, and that's exactly where they came down, 19,970 being the low. and a pretty straight down selling area. So pretty straightforward on the key levels. They broke the key level on the NASDAQ, and when they did, they accelerated to the downside as we said they likely would. And for the NASDAQ, they are in their wave 3 of 3 zone, so we could look for a wave 4 bounce that would coincide with the ES bounce as well. We would look for that back up to about 20,300. And then from there, we'd look for down to the 19,800 area, one more bounce, and then on down to this 19,500 area overall. So NASDAQ is following a bearish path for now. They need to continue and fill out this entire 5 waves. If they fill out this entire 5-wave structure, and then we get a bounce and a break of whatever low we make here, that's when we would start wondering or being more confident that a potential top is in, and we are looking at much larger downside. So it's still a long way to go for the bears. Nothing to get too crazy about just yet, as we are at major support on a lot of charts, including the NQ and ES. And this is typically where the bulls would want to step in and buy. So a straight down break of this support would be a somewhat bearish signal overall, but the bears still have a whole lot of work to do. For the bulls, again, they just brought it down into support here. You could count this as an ABC currently, into this support area that we talked about here. That's 19,950 area. And then we could look for a bounce. Again, that should take us, if you're bearish, to the 20,300 level. If they push back over 20,500, that would be a bullish sign, and we'd look for the bulls to try to take control to the upside and push this back up to new highs into the 21,137 region. So overall, bears have control in the very, very short term on the NASDAQ. Overall, in the big picture, the bulls still have control. If the bears can continue to take the ball and follow through to the downside, that would be a good sign. Breaking this low here at 19,715 would be a very good sign for the NASDAQ. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial, because I want you to get in there. I want you to make sure you love it, become part of the trading team, interact with everybody, and make sure it's for you before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking it out. We also have our educational material, our Elliott Wave 4 Beginners Online course, and our Advanced Elliott Wave course. In our advanced course, we are teaching a lot of these complex structures we've been seeing lately in the market, with advanced fib levels, diagonals, double and triple threes, flats, triangles, all that stuff that becomes very difficult to follow and trade. We do teach in bite-sized chunks. Makes it very easy to understand so that you can find the key levels that we use and understand where the market changes. As you can see on the screen, our traders are really loving this course, but I do understand if it is too advanced and you're just getting started with Elliott Wave, which is why we have our Elliott Wave 4 Beginners Online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. It can be very difficult when good news makes the market go down and bad news makes the market go up. And this is because Elliott knew that the news cycles were garbage long ago. He knew that key levels mattered, and what happened when those key levels broke and what happened when those key levels held, as you've seen over and over again on the charts we do. This gives you a huge advantage over the rest of the trading market. This course is 25 videos where I go over 3 sections. Your introduction, where we go over your expectations, your mindset and emotion, the KISS method and why it works, the chart setup and tools, where we go through every tool you need with Elliott Wave Theory, how to use it and why, and the Elliott Wave 4 Beginners area, where we go through each of the waves, how they work, how to find these key levels, the theory of alternation, the Elliott Wave degrees, the corrective depth theory, everything you need to know to make sense of this irrational market. The really awesome thing about both of these plans is, if you want to get them at a discount and get both of them together, we do have our bundle plan where you get $37 off of the courses, and you get both courses in this bundle. But if you don't want to pay anything at all, you can simply become a member of one of our monthly rooms, because those courses are included in those rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where we go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing and day trade, which means we do trade quite often in my room. Now, if you're looking for futures trading, individual stocks, income trading, and advanced trading, you need to check out PT's third room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, his income trading method that is just crushing the market, and his reduced risk binary method that gets you in at a cheap price and gets you big multiples on your money. And it's how he structures that trade that's so unique. It's something you really have to see to understand, which is another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, We'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today. Our key levels to the downside, they got to break 56.30. Through that, and we're looking at 56.10, 55.85, 55.20. To the upside, if they do bounce, the bears want to hold 56.87. Anything over 5,700 becomes bullish and starts to look like a new rally up toward the 57.45 area next. Over on the NASDAQ, bears have control of the short-term market. In the big picture, it's still bullish. However, we are in the midst of a pullback, and the degree and nature of that pullback is still being determined. The bears can continue directly, but they would need to break through this 19,950 area. We would kind of expect a bounce here soon, back up towards 20,003 area, then continuation to the downside. Breaking the 19,715 area right here is a big deal for the bears. If they can do that, that would be a very good start to a bigger downtrend. Guys, that is your market update for today. I will talk to you tomorrow.